Hey guys, Boris Lasser from BK Forex. Welcome to our weekly Forex technicals for 7/21, 7/28. Euro yen to new highs. As always, trading foreign exchange on margin carries a high level of risk and suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Well, I want to take a look first at the euro. Oops, where's my euro here? Come on in my little euro chart. And daily looks relatively bullish. You see this big burst out obviously 2 weeks ago off the dovish Bernanke comments. Shallow retrace, second extension, even a shallower retrace, and kind of a little bit of an extension here. Bottom line is, it's making higher lows when you look at it on a micro level, and it just needs one last thing, which is to break out above the highs. So a breakout above 32.20 here looks very constructive because that opens up a run all the way out to 33s, possibly even 34s on a potential upside. What could drive it? Well, we have the PMI data over here, and the PMI data, of course, can be very, very surprising. I'm talking about the flash PMI data out of Eurozone. If, for example, it somehow prints at 50 or higher, which would be a big surprise to the market, and put Eurozone PMIs back into expansionary territory, that could drive us higher. Comments from Draghi, anything. It's really impossible to predict what could be the catalyst at this point, since the markets are so flaky. But the bottom line is, if we can take out the 32.20s, we stand a much better technical chance here of really extending this rally to 33s, 34s as we go forward. So euro looks relatively healthy actually at the end of this week. I would say probably a lot healthier than most people thought it would be, given its circumstances. And then you take a look at the dollar yen, which also looks relatively bullish, and especially look at this, the buy up into the last, sort of a doji-like candle here. The off the lows, we went back down to the hundreds and came back up and pretty much finished at the highs, 164. I mean, that is a bullish close where we come down to the lows and come back right back out to the highs. So a lot of anticipation ahead of the Abe election. Of course, if he wins big, as I said, there's a potential here for a gap open on Sunday night, and we could certainly be seeing 101. The key level of resistance is going to be 101.50. It'd be interesting. I mean, it would be incredibly impressive if we just ran through the 101.50 right away. I doubt that's going to happen. It's probably going to stall at those levels first and foremost. But a break above the 101.50 pretty much puts us then into a full open-end run towards the yearly highs at 103.50. So also looks relatively constructive. Which brings me to my central story of next week that I think is worth watching, because if you make this assumption that the euro is constructive, dollar yen is constructive, then clearly the trade that looks most promising here is the euro yen trade. Now, of course, this is all predicated on the assumption that these things are buys into the front of the week. They could be completely wrong. But assuming that you're right, you have a potential here to challenge the yearly highs. Now, the yearly highs were a big flame out here, 33.60 that kind of flamed itself out. But if we have a close into the new yearly highs or near the yearly highs, that would be very, very bullish and open up an absolutely potential run all the way out to 135s as the pair starts to make fresh highs into the year post those levels. So I think that's a key thing to watch here in terms of these levels here. This 33.60 level breakout above that really does open up a very, very strong run to the upside. Now, the next up on the plate is pound dollar. Pound looks also relatively good. I mean, this 53 level is still pretty much containing us to the upside. If we can take that out, that opens up a wide open ground to the pound. And there isn't much pound data to front us next week. But if whatever economic data we have on the calendar proves positive, and we can take out the 53s, it really does open up a lot more breathing room here. That also, by the way, puts us in an interesting contract with the euro pound, because if you bullish euros, you bullish pound, but the pound starts to have more relative strength, you could have a potential here to come back down to 85.50. Certainly, we distributed pretty nicely here from 87s down to 86s, and there may be more downside trade here, to go. So worth watching on the crosses for the euro pound. Last but definitely not least is the Aussie. Aussie has been a problem child for a long time, and it certainly was again this week. Just could not clear the 92.50s, 9300 level. Came back down today. Even the positive news out of China was just a sputter. We took out 92 35s and then came right back down and just couldn't hold it. Having said this, though, this 90 level definitely holds, and 90 level is the key support. So it could just be consolidation, but really, until and unless we take out 93.50s, the operating assumption should be that the pressure on the Aussie remains, and that we could be coming back down into 90s. On the other hand, we start drifting into the 90s and we start breaking 90s. A break in the 90s really opens up a run all the way out to 88.50. So also worth watching both sides of the range here. The range basically at this point is around 93.50 to the upside, 90 to the bottom side. Everything in between is just consolidation and noise, and probably worthwhile to just simply ignore the trade in between. Lastly, let's take a look at dollar CAD, which has been performing much better amongst the calm dollars. Look how tight it's trading. It's testing this 103.50 1, 2, 3, 4, 5, 6, 7 days in a row, and 103.50. And this of course was former resistance, right? Which then came back. We came back all the way down below 102. But former resistance becomes now current support. This support gets broken, then the next target is obviously this next support, which is the 102 level. So that's worth watching, especially in the next week if oil starts to trickle even up to 110 a barrel. Could give us the impetus to start breaking this 103.50 level to the downside and take us all the way out to the 102s. That's how the week shapes up. There's a lot of, I think, interesting, surprisingly enough, for summer doldrums, there's a lot of interesting stories and ideas here, especially on the crosses. Definitely worth watching. Certainly Sunday night is going to be very exciting post the Japanese election. I'll be there, and I hope so will you. And wishing you guys the best of luck and the best of trading. This is Boris Lansberg for BK Forex. Over and out.